Good afternoon, everybody. How are you guys doing? Here on YouTube Live for the first time in a while. I hope well and do it right and see if it all works. All right. Looks like the stream is working. Channel, and then we'll do that. So, let's in some way that chat and all that stuff. So, how are we doing this morning? Don't like, so I'm still like really confused about their YouTube. So let's see this other view. How do I? Oh, whatever. Okay, so let's talk about this morning. So I was chatting with one of my subscribers over on our private Slack channel. Our audio is dropping out like before. Try this. Hold on for a second. Is that better? Is that better? If I move my head, is that better? Is that better? Talk to me. Talk to me. So I can sit here and I can at least figure out what I'm doing wrong, what we're doing right. Better. Okay, so if I sit back like this, how does that sound? That bad? Okay, awesome. So it's that mode on the microphone. Now, interesting that I don't have that problem when I'm on with Halsey. So very strange. Don't know. Do not understand. All right. So was speaking with one of the subscribers to Gold Ghosts and Guns on our private Slack channel, and we were talking about, and he was trying to decide what he was going to do in this market to sell some Litecoin that he owns, and not being in any way, manner, shape, or form an experienced trader. He was asking me what do we do, right? How do we, what he was trying to do was try to put in a stop order. And for those of you who don't understand what a stop is, so if you're if you're in a stock or a cryptocurrency or whatever, and you bought it at $20 and it's moving fast, and now all of a sudden we're getting up towards $40 and you're like, oh my god, this is feeling really weird, and I think I want to be out of this stock, but I want to get as much of the price move as possible, and I don't know where the price is going to top out at. So what you do is you put in a stop order to say, okay, I can't watch the ticker to try and hit the top. I'm going to walk away, and I'm going to set this as my minimum price. So say the stock is trading at 35, right? And you're not sure if it's going to go to 40, and you don't really care. But what you don't want is for it to correct hard below, say, 30, and where 30 would be a sell signal. And so you say, well, okay, I'm going to put a stop in. I'm going to walk away from the market. I'm going to tell them to take this stop limit order, right? Which says if the stock corrects back to $30, convert this to a market order and sell my stock. Okay, that's how stop limits work, and they're very powerful. I prefer, as opposed to a hard price, which is easily seen because all the stop limits and everything are seen by the market makers and by everybody. They're part of the order book for those who have level 2 or level 3 quoting, depending on the exchange you're on. In the crypto markets, you don't have this. We have what we call level 1 quoting. This is what they have. You have at best level 1 or level 2. You can see the order book, and that's about it. But there's deeper information depending on how much you're willing to spend, as a member of the exchange in order to get better information. They offer different exchanges offer different levels of service under professional. The big exchanges offer different levels of service depending on who you are, and depending on how much money you're willing to spend. So, so your stop limits are seen, and then at the end of the day, big players can come in and do what we call stop loss raids, where they just go in and just buy everything up and run all your stops, scoop up all your stuff, and then move the price back higher, and then move the price higher again. You sold a lower price, and the thing then keeps going on. So stocks at 35, they see a whole bunch of stops at 30, they go and they run the stops, pick them all up, and then raise the price right back up again, and then push it up to 40 or 45 or 50, and you were stopped out at 30, and now the stock's at 50, and you were screwed. And so stop limits in that respect are very, very, they can be very dangerous. Okay, especially in fast-moving momentum markets like Bitcoin and the cryptocurrencies. In kind of boring or staid markets with low volatility, or what we call low beta markets, hard stop limits like that are fine. Because the stock's not going to move more than 1 or 2% during a day, or 3% during a day. So hey, this is what we've got, and this is we've corrected back to this like danger zone, and I've got profit, and I don't have time today. I got to take my kids to school or whatever. So you walk away from the ticker and you put in a stop limit, below, like a support line, and just say, look, if it drops 2% below the support line, I'll sell, and I'll walk away. I prefer, however, and most people do prefer, that when you're dealing with trying to use stops in a runaway market, right, in a trending market, in a fast-moving market, either up or down, the market that's moving up fast, what you want to use is what we call a trailing stop, and a percentage-based trailing stop. If the exchange supports that kind of thing, which apparently GDAX doesn't. I don't use GDAX, I don't know. And so so what that says is, look, move my stop up to be 2% below the current highest bid. And if it corrects 2%, if it corrects to that price, then convert this stop to a market order and sell it. Now, and that's the best way to capture as much of the move as possible. Now, that being said, on unprofessional exchanges, really, like we have in the crypto markets, they're not professional. They're just not. They're kind of Wild West like. I trade on HitBTC on a regular basis, and I'm just like, I'm not really, not comfortable looking at the situation, because it's obvious that the interface is slower for someone trying to manually trade than other people have access to. They're constantly moving. You can see the spoofing and the order book manipulation constantly, and it's so freaking annoying. It's not funny, and so much of the liquidity that's actually on those exchanges isn't really there. You try and hit those bids. You say, I want to sell it into that 2,500, Bitcoin block at, I don't know, 1385 or whatever, and you go to hit it, and you got to put the order in before you get there. The order's been lifted, and then you wind up on the exchange at that price, and then you never get filled, and then they move the market down $5, and you can't sell, and then they do it again, and you try and do it again. Now you're trying to sell at 1380 and then 1375, and they just keep doing this shit to you over and over and over again, and it's really annoying. Okay, and that's the kind of thing I'm worried about, because once you've been converted to a market order, now it's up to the market makers on the exchange to fill your order for you, and they're under no compunction to give you a decent trade. On HitBTC, there's no, you didn't sign a EULA or agreement that says they're going to go out of their way to get you the best price, right? They're going to get you whatever price they think they can get you. I got news for you. I did one market order on HitBTC trying to sell EOS when it was trading at like $1.10 or $1.15, and I put in a market order with the highest bid was $1.10, and I got filled at $1.01. And I said, well, that's the last time I'm ever putting in a market order. And it wasn't even a fast moving market. They just gave me some random freaking price. I'm like, oh, this is freaking corrupt as shit, and I'm not dealing with it. And that's the thing you have to be worried about when you're trying to sell. So I don't know what you can do on what's available, what the interface looks like on GDAX. I should probably do so, but I've never been arsed to do it because I don't trade there. But I'm going to put up when put my desktop now, and I'm going to show you, what it looks like to trade on something like HitBTC, and give you an idea of what I was trying to explain the best way to get the best price in a fast moving market to the subscriber, and I couldn't really do it because we just couldn't do it in text. The best way to do it is just to show you. So I'm going to bring up my desktop now, and we'll get that taken care of, and I'll try and give you an idea of what's going on. All right, so let's make that big, and then this is the setup on HitBTC. You can see that we're getting a major correction in all of this stuff. All right, and so here's the order book, right? I got it highlighted here. These are the buys, these are the sells. So if you want, so in the time it takes you to actually type in what you want to sell, at what price, and everything else, you can go over here and you can click on the price you want to sell at. And then you can go over here and say, well, with my, or you want to sell at, and so then you say, I'm going to take my balance, because I want to sell at, that bid. Now notice how quickly it takes you to go from here to here, and then try and sell. I got 372, and then, it's crazy. The speed at which the market is moving, you can't really lock in a price unless you want to be stuck on the exchange. So what you do is you don't click on the highest bid, because sometimes these bids are, unless these amounts are huge, come down here to that bid, the third or fourth highest bid that's available. Put that price in and set that as your limit to buy, to sell with, and then you may get filled above that. Okay. Because you're saying, I'm willing to take that price, and if somebody's got a higher bid than you, then you're going to get filled immediately. And this is the way you can manipulate using limit orders to make them act like market orders, and you get out in the time frame that you want to get out. And when you make the decision to sell, that's the way you're going to do it. And that's what I would suggest you do. In order to get out, and you may lose a couple of pennies on the trade, but it's better than losing dollars trying to continually hit this bid, which is a phantom bid, then go up here and manipulate the interface and get in and out again. It's just a nightmare. Easiest thing, go down 3 levels, three orders below the market, and then go. Okay, that's what I would suggest you do. That way you'll get. I'm not going to sell here, but I'm not going to actually execute a trade, even though I probably should have sold earlier in the day. But that's where you are. Okay, so does that make sense? I'm going to go back to things so I can actually see. I go back over here and see what we got going. Okay. So manipulate the interface, Thomas. This is the hardest part. All right, there we are. So looking at the chat, does that make sense to you guys? Now that you have an idea of what's going on, of what I'm talking about, because it's kind of important thought about all this stuff. So this is the mechanics of actually, dealing with the interfaces and dealing with how to physically trade this stuff is actually really, really hard. Are there crypto exchanges that offer this stuff? I mean, like second and third order order books? Well, what I just show you on HitBTC would be considered a level 2 trading package. They show you the order book and the market depth and all that. That's pretty cool. And most of the major crypto exchanges show you that. I've seen it. Bittrex has got it. Certainly, Open Ledger has it, and everything else. Now, the opposite end of that, speaking of which, this is part of the reason why I kind of like, for novice traders, I prefer you guys to actually go over to either Open Ledger or BitShares.io. And the reason for that is because it's not a fast-moving market. As I've explained many times about Open Ledger, and I'm going to pull up Open Ledger's interface now to show you, it's because as opposed to paying a fee on the back end of the transaction, which allows for all this order spoofing and everything else, you have this situation where all you have is you pay a listing fee to actually put your order up. And then if you sell, well, then there's another fee for selling. So there's 50% of the transaction fee is paid up front as a listing fee. And what that does is that radically drops the amount of fake liquidity into the market. And you can actually note that that's actually a real market. Okay. And you get into a situation. I'm going to pop on over to Open Ledger now, just to show you what I'm talking about. We'll go back over here. So we go to the desktop, and then we turn over, and there it is. Hey, look at this. Look at this technology. All right. So, for example, I'm going to go over here, and I'm going to pop up OpenEOS versus the US dollar, and we'll get that trading. So here we are, right? And there's the market. And so shows you the market depth over here, the sell orders, right? But notice that there's the fee right here to pay 0.01213 BitShares, which is like less than a penny, because BitShares are trading at 17.5 cents a piece. So you're not paying a lot, but notice how there's no action here. Notice how the spread is, 477 to 438. It's also far higher here than it is on HitBTC, where there's all this quote unquote liquidity. But there isn't any liquidity because nobody here on this exchange actually wants to trade at these prices. And certainly not the prices that they're trading at over there. So if you can, and so what this is the most, and they're listed here in the order of most volume, right? In the last 24 hours, and actually trading bit shares versus USDs. This is actually a really good market for you guys to learn how to trade on. Is this the actual? Yeah, there it is right there. So you can see that the spread here is a lot tighter. So it's 1757 versus 1755. So this is a nice tight market with less than 1% spreads. And you can, kind of cut your teeth trading, looking at some of the chart lessons that I teach you about reversal signals and all of that stuff. So here's one for you. If you own bit shares, right, and you want to get into dollars, well, here's the bottom of your market. 17.1 is the 17 cents or 17.1 cents is where you want to be. You want to sell into this, but there's no stop limits on this. This is just everything's a limit order, And so the same thing goes if you own bit shares, which I do. I own some. So if I want to sell some, I just come down here and go and click on that, and then click on my balance, and this is how many I'm going to sell at that price into the market, and then I'm going to pay that to do it. And there's my fee. But even just to list the order, you're going to pay the fee up front. Because if I wanted to put an order in between these, I just go up here and adjust the price. Say 1745, put it up here. But it's going to cost me that to put the order up. And notice that it's a penny. And notice how much different the action is over here. Notice how much things change. Okay. And you can say that this is not a real market, but it actually is a real market, because now at this point, this is real liquidity. These are people who've actually put up or shut up and are willing to pay money to sell their stuff on the market, as opposed to, all the Momo monkeys losing their minds over on these other exchanges. So I fully endorse learning how to trade on a market that doesn't that's not going to move around you like that. You know what I mean? So clear as mud, huh? Okay, well, OpenLTC is showing 141.46 on LTC, and why? So why is there a $15? So why is that? Because all the liquidity is on GDAX, right? All the fake liquidity and all the actions on GDAX, and that's where it is. So you could, if you want, if that arbitrage was in place and you thought you could get it over there in a timely manner and get the trade sold, you could buy OpenLTC at 141 and then move it over to GDAX and then sell it at 154. Because there isn't a lot of action, and those arbitrages will move. The truth of the matter is that the market just moved a lot in the last 10 minutes. While I was setting up this YouTube stream, we had huge movements on all of this stuff, right? If I dial in here, this is the 4-hour chart, but if I dial into the 5-minute chart, you can see how much we moved, in the last, look at the amount of action that we've had and the price movements we've had, and the other markets that are more thinly traded aren't keeping up. So if I go back over to, I'm sitting here talking about this and I haven't actually showed this stuff to you. So I'll come back over here and I'll look over at the 5-minute chart over here for EOS versus USD, or even better, it's 135 here on HitBTC. GDAX is obviously not a functional market at this point. They're having problems dealing with the volume. And so there may be order matching issues that they just can't update their price matching system fast enough for whatever reason. And so they actually have too much liquidity. And then because they have too much liquidity, or too much, not liquidity, but they have more orders trying to be matched than their system than the capacity of their system. And the latest quote is some number. That quote may not be real. When you see that kind of arbitrage like that, especially on a major market that is a major marketplace that's obviously growing so quickly that it can't handle the transaction density. It's not hard to think that it's going to be hard. It's going to be hard to hard for them to keep their order matching book and to give you accurate price quotes. Okay, if you want to trade your positions, I absolutely at this point would consider GDAX to be an unreliable marketplace. So I wouldn't trade there. That's why I stay off. And in many ways, I stay off of it. But not for nothing, just because, right? So I never played with it because I don't trade Bitcoin. I don't trade Litecoin. I don't trade Ethereum. Those are the only three things they trade. You know, I'm more interested in moving those into the exchange and then trading other things. One of the things that I've learned when I want to trade actively, one of the things I don't want to do is I don't want to be trading something that everybody else has a stake in. Okay. Everybody, you know, when you're trading stocks, everybody's trading the freaking VIX, everybody's trading the Dow, everybody's trading the S&P 500. You know, their E-mini contracts are flying all over the place, and there's 18 layers of price discovery on the S&P 500. Right? I tell people all the time that, you know, if they want to learn how to trade, don't trade gold, because they, you know, being a gold guy, they always ask me, hey, what's the best way to trade gold? I'm like, it's not. The best way to trade is to trade something boring like Microsoft. I tell people that all the time. I mean, if you want to learn how to trade something boring. Learn how to trade something that the market doesn't care about. That's where you're going to get your most price discovery. It's where your easiest price discovery. It's where people are going to get. It's where you're going to see the least amount of manipulation. Because when there's a lot of money and there's a lot of short-term profit on the table, there's a high correlation with, you know, a high incentive for corruption. So stay out of those markets. Okay? I mean, seriously. Just stay out of those markets. Trade something boring. Trade Nestle. Johnson & Johnson. You know, nice and liquid, cheap, you know, thin spreads, but, you know, there's going to be some price action in there. And you're going to be able to, you know, scalp quarters and, you know, 50-cent pieces here and there, and learn how to do it and get the muscle memory of learning how to do it. Okay? Again, you know, I wouldn't trade really thinly traded stuff on Open Ledger, like anything out of the top 5 or 6. Right, I'm going to go back to Open Ledger real quick here. In terms of market density, in terms of volume, I would stay in, you know, the top. I would stay up in here, and even, you know, look at the spreads on OpenEOS. 477 and 438, and we're trading at 3. We're trading at 376. You know, there's something going on here. Up, you know, someone's in, you know, and. But I would be trading in here. Okay. This is a good place to, you know, learn how to trade. So, just something to think about. It really is. All right. So I wanted to bring that stuff up because it's hard to talk about in text. It's one of those things that you want to, talk about in real time. And give, you know, real pictures and put, you know, pictures to words and all that stuff. Yeah, well, that's what I figured. You know, you guys don't, you know, the more we, what's the word I'm looking for? You know, the deeper we get into this, the harder it's, you know, the less experience you have, the more dangerous it's going to be for you. It's just that true. It's just true. So, oh, you know, the best thing in the world is to learn, again, in a market that isn't crazy and volatile. And the crypto markets are hard to trade, guys. I mean, thankfully, it's been mostly a one-way trade, right? So there's not a lot of downside risk. It's easy to be a genius in a bull market. It's making money in a bad market that's hard. And guys who can make money in a bad bear market, that's a real trick. And I don't mean just by shorting the market and making money on the downside. In a bear market, shorting the downside is easy. I'm talking about finding stocks that appreciate, or finding ways to be affirmative and uncover good investments in a bear market. It's hard. You know, when I was running Resolute Wealth Letter for Newsmax, this was a gold and commodities based newsletter. I mean, this was the kind of focus and mandate of the newsletter, and I really couldn't couldn't really deviate from that very much. I couldn't, tell people to go in there and buy Tesla. Okay? Not that I would have anyway, because you guys know how I feel about Tesla. But I'm sitting there launching a newsletter about, that's going to be focused on natural gas and oil and gold, right as, oil goes from $125 a barrel to 28 over the course of 16 months. How are you supposed to, show positive returns in that? Well, I did. It was hard. It was really hard. I didn't really show a lot of positive returns, but where everybody else was losing 60, 70, 80% in their oil related investments, we were down 10 or 11%. It's not much of a ringing endorsement, but it is what it is. You're trading a bear market, and you only lost 11% in the worst commodity bear market in the history of the world. You're not bad at what you do. So it is what it is. And that's only on paper. The portfolio, as we talk about in the Gold, Goats, and Guns newsletter all the time, the portfolio is designed to throw you off a tremendous amount of cash yield, so that you're still pulling cash down every year. Your paper positions may be down. But if the companies are stable and their dividends are stable, then their yield is stable, then heck with it. Just take the long-term view, and you'll make it up in the back end. You'll make it up through dividend appreciation and everything else. So in many ways it is a Warren Buffett style investment thesis. If you like the company at $30 a share and it drops to 20, well, shouldn't you buy more? If you liked it at 30, now it's at 20. Still the same company. The market just thinks it's not. The question when you get into trading, get into investing in trading, and the interface between investing and trading is, is what's your dominant behavior? What are your goals? Okay, and so that's the important part. Remember to keep that and match your time frame with your trading. Okay, now the Bitcoin markets are so volatile that you really can't watch them any longer time period than like 4-hour bars, right? You really can only look at 4-hour bars. Daily bars at this point are, they're cool, but there's so much information lost in a daily bar that that's aggregated in a daily bar. It's almost too much technically to hang your hat on. So you kind of have to get in there and trade hourly and 4 hour and 1 hour and 30-minute bars, and understand that that's really the market at this point. That's how the market is trading. Now in the aggregate, the long-term charts are all freaking bullish as batshit. There's none of the day-to-day stuff really even matters. But I'm telling you that when we hit an interim top or a bottom, it's gonna show up on the 15-minute or 30-minute chart, and you need to be prepared, because you're gonna have the opportunity to sell into that area, into that 1 hour area, that 1 hour or 2 hour time frame. That by the time you come back to it the next day and get a confirmation that we've entered a bearish correction phase, you could be down 30% off the high. Most of the correction happens in the first 4 hours, and then just kind of bounces around for a little while, and then might grind out a bottom for 3 weeks, and there's no trade there. And I do want to see you guys every once in a while get a nice 20 or 30% accumulative trade, because the opportunities are there. So even if you only get 1 out of every 5 that present themselves, it's still a tremendous profit up. It's still a tremendous wealth generating tool. Okay, that's why I bring this stuff up, to try and help you make good decisions, not just by showing you what's happening on the chart, but now with something like this, to try and prepare you for how to deal with in the moment. How do I sell this stuff? What do I do? And since I know you all are, for the most part, are novices, so it's important information for you to have. For me, it's like I've been doing this stuff I've been trading on exchanges since 1998. So been doing it for most of my adult life, and I'm still not right. And honestly, and you still have to have the right temperament and everything else in order to be really good at it. I miss opportunities all the time. I'm not, going to lie to you. But, as long as you catch some of them, you're good to go. All right? That's really all I wanted to talk about. If you guys have any other questions, I'm here, for a couple more minutes. But if you don't, then I guess we'll probably shut this down, because we're already at 30 minutes. All right? So what do we got? Anything else? I'll give it 30 seconds to see if we got any other comments. Oh, okay. DTF. So DTF asks, have you noticed whether bigger moves in crypto happen at certain times of the day, 8 a.m. versus 8 a.m. EST versus Tokyo? Good question. Excellent question. What I can tell you is this. In certain markets, the Japanese like to come down and correct the excesses of the American markets. I get almost like clockwork. Sell into if every day this week, if I had sold EOS, if I had put in a limit order to sell either at the market or 10% above the market, really, do I have it on slow mode? Oh, slow mode is on. Well, I'll change that. That's all right. Well, I'll change that because I don't know where that's set though, so I can't do that now. Okay, but excellent. Thank you for letting me know that. I'll try and I'll deal with that. So, what I've noticed is that if I go to bed at around midnight or 1 o'clock or whatever, and if I just put in a sell order, either 10% above the market or at the market, if it's we're in a breakout move, the Japanese come online. They and the European market's open. We just start to see almost indiscriminate selling and shaking out weak hands. And every day this week, I could have done that and made a 20% accumulative trade in EOS. Easy. But I hate selling unless I've got a really good moment. Unless I've got a really confirmed signal. I'm just a terrible stick in the mud when it comes to actually selling and rebuying. It's hard to do. It sounds easy, but it's so hard to do in the moment. Yeah. And I'm such an analyst that I love watching, and I get mesmerized by the numbers, and not the and forget to actually make the right decision. So there you go. Lots of liquidity in Japan, and maybe better price discovery actually exists in Japan. So let me see if I can find where slow mode is and get that turned off for the options. Oh, there it is. It's only supposed to be limit chats posts to every 10 seconds per person. Interesting. They had it at 5 minutes. Well, slow mode has been turned off, so you guys can talk all you want. We'll make more. Okay. Oh yeah, we're getting a huge correction right now. So the Bitcoin markets are in free fall. There's no argument here. The markets are now in free fall. I'm going to pop on out to the 30-minute chart, and I'm going to start showing you what I'm talking about. You'll notice that I don't even my heart rate doesn't even go up when I say something. Like, oh yeah, look, I'm such a veteran trader of gold, of this kind of stuff in gold. So we've hit it looks like, so here's a moment. So 13.1 looks like a potential support line. Obvious that this Fibonacci series is no longer valid, so I'm going to doing this. Get in there and see what's going on. Also going to move out, but we'll hold on to that. But notice the volume that we're starting to get. This is looking like climax volume. All right. So I'm going to pull that out so I can actually see your chats. Yeah, you get analysis paralysis. I'm so bad at that. I'm going to be frank and honest with you. I am so bad at having analysis by paralysis by analysis. I'm really bad at it. It is one of the worst things. One of my worst personality traits, and I've never been able to correct it by just trading. It's always gotten worse. It's worse, especially during times like this. So what I would say is, this looks like a good bottom here. This looks like we might get an interim bottom here, and so we should start to dial in and look for reversal signals, because this is good volume. This is like climax level volume. So look at the volume peaks from previous lows, right? And you'll see that we're reaching those levels of volume, and that's usually a good sign that we've got a bottom coming in. So like this 15-minute bar here is going to be really important. Okay. if this is a bearish close and then we get a nice bounce, this bar right here is going to be the big one. I'm going to dial in real quick. This is going to be the big one, right? So whatever the high here is, 13,609. Yeah, you're going to need to see that. In the next half an hour, we're going to need to be back about in the 13.7s for this to be any kind of interim bottom. Okay? That makes sense? Looking at some other charts real quick. Yeah, so, we had an interesting, I just finished a blog post, put it up on Steam, that we had a nice breakout occurring in business Bitcoin Cash, and that we had this, if you go back to yesterday, I showed you the daily chart yesterday. Now, this is interesting. I just put up a post on, can you guys see this, or do I need to pop this thing out and make it full size? Hold on. That's small, and then make it big. Okay, so let's look at this. You guys should be able to see that now. So this is the daily chart of Bitcoin Cash versus Tether on HitBTC. Notice the following, and I put the blog post up earlier, that we had an opportunity here. This is your downtrend. So we had a breakout the other day, and the bottom of this bar is the level that you want to start watching. When you get a huge bar like this, notice how all of this next week's worth of trading all happened within the breadth of this bar. That's great. And then we had a little bit of a bottom here. Now, it wasn't on terribly high volume, right? It wasn't actually on high volume at all. It was actually on really uninteresting volume. But notice how, this is your major bottom, right? This is a bit of a reversal because this is still a downtrend, but bars like this, I don't even consider down bars. I almost consider them up bars. I really don't. I want to see that open bested. I want to see some real price action in here that tells me we're going to get a move back up towards that we're going to get a definitive bottom here without any what's the word I'm looking for? Any significant volume down here and any real conviction here. It's an interim bottom, but it was always destined to fail right here around 1,600. Like it needed to get through this cluster of highs in here and around $1,600 or 1,600 bucks. And then we pushed up, couldn't hold it, moved higher, inside bar, collapse. 2-bar, and this is a classic 2-bar reversal, right? So up, we got an inside bar followed by a 2-bar reversal. Classic reversal signal, right? Absolutely classic. So you could have sold here and then bought. Then where would you have bought? And here's the interesting part about it. If you just used reversal signals to confirm your trades and waited, you would have missed the entire move. You had to sell at this. You had to sell in this range, wait for the reversal signal, and then then to buy back in. You would have bought back in here on this close, because here's a reversal signal, and then it's immediately reversed 2 days later by this massive bar, which is still technically a little bearish, but it closed above the high here, so that's another. It's almost a back-to-back reversal. Which also confirms a double bottom. We got a bottom here and a bottom here, and this is on significantly more volume than we had previously. So this is firming up this 1,200, 1180 area as support. Notice how, with all of the drama this morning, look at how uninteresting this price move is. Now this is your reversal signal. So the low here is now what's needed to reverse this reversal signal. You might actually even get a huge move down before it springboards back up again. It's very possible that we could putz around in here for a couple of days before moving higher. But we've got our signal to the upside that the market wants to go to 1,600 and possibly beyond. So if this correction, and this is one of the lovely parts about HitBTC, if this correction here ends in the next this was dialing into the 15-minute chart, you can see how this whole big formation just broke down in the last 40 minutes because Bitcoin broke down. But if we get a solid bounce here, back up into the $1,400 range, then we'll see $1,600 again, pretty quickly. And if I were to put up a Fibonacci retracement series, you go. this, you can see how this is looking likely that this is the bottom. Note this huge bar right here, which we had a breakout. Right, look at this huge breakout bar right here, and then it was immediately reversed by 3 times that volume, which kind of tells you that this we were setting up here, that something was happening here. Somebody put up a big wall and said, no, I'm selling into this. I'm pushing this price lower. This was your harbinger that the prices were moving lower. This is sometimes where you have to dig in deep and try and find some good information. Had I seen this morning, I would have never put out the blog post I did this morning. I would have gone, oh, yeah, there's going to be a collapse later. And here it is. So, but watching this price right here is what you want to look for. All right. I've been doing this for 40 minutes. I think it's about time to go. Okay, you guys take care. You have a great afternoon. Be good and keep your stick on the ice.